To kick off today's webinar, Roy and Vuyani, would you please make sure that you come off of mute? Great.
Thank you.
Excellent. Okay. Well, hello, and thank you for joining us. We welcome you to the World Bank's Agriculture Finance Support Facility webinar. Our speaker today is Vuyani Jarana, Chief Officer with Vodacom Business. Today's webinar is facilitated by Roy Parizat, Senior Economist with the World Bank and Manager of the AgriFin program. I'm Tamara Palmer, and I'm assisting with the tech of today's webinar, as is Rebecca Rivola. And before we proceed and I turn everything back over to Roy and Vuyani, I'd like to provide a quick tour of the webinar space. The participants are on mute, that's you, and if you need to connect with the facilitator or the tech team, please do send your question through the chat box feature. It's found on the right side of your screen. And just a quick note, the last 20 minutes or so of our time together will be a Q&A session with the presenter. We encourage you to ask questions throughout the webinar. We will collect and share them as time allows. And finally, this webinar is being recorded. Okay, quick note about today's speaker, Vuyani Jarana, Chief Officer of Vodacom Business and Enterprise Division of the Vodacom Group, is an engineer by training. He holds a national diploma in telecommunications, a BCom of Economics and Business Management from the University of Transki, as well as an MBA Business Administration from Stellenbosch University. As Chief Officer Enterprise, he is mandated to drive business growth through the enterprise business segment. He is responsible for strategic planning and execution of the enterprise growth plans in all Vodacom markets, Pan-Africa. He was previously the Chief Operating Officer of Vodacom South Africa, a position he held until March 2012 before taking on his current role. All right, well, thank you. I'm going to turn it over to Roy now and Vuyani.
Thank you very much, Tamara. I'm going to be very brief here. Obviously, everyone's tuned in not to listen to me talking about AgriFin, but much rather to hear about the exceptionally exciting work that Vodacom are doing in South Africa. Obviously, this is part of our wider AgriFin webinar series, which aims to bring good technical presenters, people who really understand the nuts and bolts of linking farmers to services and to finance, to share them with the wider world to try and help encourage replication. The reason I'm so excited about this one is we had a webinar a few weeks ago where we had an introduction to the idea of mobile telephony and how digital telephony can help reach smallholder farmers. But this really is now where we're getting into a case study, which is exceptional. It's exceptional for a number of reasons, and I'm not going to preempt the presentation, but from my perspective, it's exceptional because it meets a business need. It meets a business need of agri-businesses who need to work with their smallholder producers. And it's a business need of smallholders who need to invest in their enterprises and receive good quality technical and agronomic data and links to services. And I think it also works for the mobile network operator. This is what I'm imagining we're going to hear more about, which is they have these incredible platforms that have global reach across countries, regions, and globally. And they have the ability to provide incredibly value-adding services. And from the financier perspective, the data that is contained within all of these networks is incredibly useful for understanding who clients are and how you can reach clients in a transaction cost acceptable manner. I think what's even more exciting to me is we're at the early days here. This is probably one of the best examples of this technology being used in this manner. But there's so much more that can be done, so many more applications that can be piloted and expanded. And ultimately, anything that works has the potential to be scaled up because of the incredible opportunities that ICT provides. So without further ado, I'd like to say thank you very much to Vuyani and hand over to him. I think we're in for an exceptional treat about learning some incredible technical innovations that are happening in Sub-Saharan Africa, and also I think it's going to kick off a lot of thought processes in the audience. And so I encourage you all, when you have any questions, when you think, how could I do that, or how would the technology work in my case, or I had this specific question, you have a great opportunity at the end to ask questions to Vuyani. So throughout, please post your questions in the Q&A box. We'll collate them this end, and for the last 15 to 20 minutes, we will ask some very tough technical questions to Vuyani. And again, if you don't ask, I've got 1,000,001 good questions to ask, but I do hope that the questions come from the audience, because this is an exceptional opportunity to ask a leader in the field some very, very critical questions. So again, thank you very much, Vuyani, and please, without further ado, please take it forward.
Thank you very much. Thank you to the audience. I'm going to run through the slides. The first part of the slides is purely around the statistics of the agri-sector in Africa, as well as the role of mobile. Then I'll go into some of our own implementation, how we architect the solution and what the impact would be or is in terms of on different role players in the agri value chain. So if I drive the first slide. Firstly, when you look at at the African continent, the agri-sector specifically, there are key statistics around 32% of Africa's GDP coming from agriculture, 60% of arable land being in Africa, 65% of Africa's labor force working in or employed in agriculture. This is a very, very important statistics because Africa, in terms of its youthful population, we talk about the demographic dividend, and it's important that meaningful jobs, and especially around education, are created so that the youthful population remains a dividend instead of being a time bomb, if you like. And again, if you look at the sector, 280 billion in 2010, and it's forecasted to be about 880 billion by 2030. But yet, in the same continent, you've got about 240 million people who lack adequate food, and we've got 40% of children in Sub-Saharan Africa stunted from malnutrition. And this slide talks about both opportunity and challenge. Opportunity in the sense that Africa is endowed, has a very good sector endowment in terms of labor as well as land. And of course, the market in terms of domestic demand is there, but there's still unmet demand domestically, and the global food demand is projected to grow significantly. So both challenge and opportunity from an agri-sector point of view in Africa. If I go to the next slide, I'm just going to click through because this is a flat PDF, should be animated. So we talk about African continent that was self-sufficient in 1960, and today the net importer of cereal, and if unabated, there's almost 110 billion rand import of food forecasted by 2025. And the African Development Bank talks about in its Feed Africa strategy, talks about Africa being able to feed itself. So the message here is that the opportunity for entrepreneurship, the opportunity for job creation, the opportunity for national prosperity for Africa as a continent remains huge in the agri-sector because there's both domestic and global demand. And Africa is endowed with resources that puts it in a strategic position to actually be able to address the market. Of course, a market is a market if you can address it. An opportunity is an opportunity if you can convert it into some form of initiative that can address society, but also give a return on shareholders and also drive national prosperity. I think those are some of the key statistics in terms of what's likely to happen. Some of the challenges you have, 70 agri-researchers to 1 million inhabitants talks to big challenges because to be able to improve the agricultural production and improve yield, we need to have science, we need to have scientists in agriculture, we need to improve extension services into the agricultural sector to support the smallholder farmers in the continent to improve yield and be able to meet the demand for food that is increasing. The key part about this slide is that by 2050, the continent will add another 1.1 billion people, and these people need to be fed, which means agriculture yield must improve, and we need to look at how then do we build capability in the continent for Africa to be able to feed itself, but most importantly, to also be able to support the growing global population. So all the indicators are presenting both opportunity and the challenge, but we need to talk about what kind of strategies, what kind of a well-coordinated action that both private and public sector, financial institution, and the agri-industry can come together in a meaningful way to actually leverage the opportunity, the sector endowment that exists in the continent, to be able to make sure that Africa can feed itself, but also it could also be the food basket of the world. So this is the thinking. When you look at the drivers of agriculture, we looked at the value chain from a Vodacom point of view. We said key is access to information, which means making sure the farmers have got access to information both for market, but also what kind of crops they can plant in terms of the soil types. We said land and water becomes important, labor and skill, extension services, agri-researchers, agri-scientists, that will find modern ways of production in agriculture so that we can improve yield, also can improve the quality. So we talk about access to market. Without market, none of these things make sense, because agriculture is not a charitable action, it's a business. Farmers are in agriculture to earn a return on their investment. So it's important, this issue of access to markets, not only locally or domestically, but globally. And again, access to finance. This is one of the key important elements, access to finance for Africa's agriculture. For Africa to feed itself, Africa needs skill to support smallholder farmers. In some of the countries, like for example Nigeria, 70% of the farming population is smallholder farmers who farm no more than 5 hectares each, and yet they account for almost 90% of agricultural produce for that country, which means a very, very important sector for that country and for the continent to support. But private capital flows into agriculture, especially smallholder farming agriculture, has been very low to date, very, very low. The African Development Bank talks about around about 5 to 10%, which is very low. So for Africa to feed itself, skill is needed, modern ways of production become critical, but most importantly, access to market and access to finance become instrumental. Otherwise, the opportunity will not materialize. Now, when you look at the different actors in the agri-value chain, what do the commodity buyers, the big aggregators who are buying produce in Africa see? They look at the smallholder farmer environment. They see we probably have a challenge of quality, food traceability, perishable products, fragmented value chain. How do we buy from these people? Because we do not have a framework within which we can work with them. And again, disruptive logistics, lack of economic infrastructure for agriculture, whether it's tech houses, whether it's silos. So there's a lot of challenges they see. The cost of delivering, of getting the product from the fragmented subscale farming units into the aggregation point where the big off-takers can actually start buying the services. So these are the kind of challenges when we talk to some of the big commodity buyers, they tell us they see these challenges. Again, through the lenses of the lenders, which is more the finance, why is it that the private capital flows is very low to agriculture? They see risk, they see the smallholder farmer practice as more of a black box. We do not know the farming proficiency of the smallholder farmer. There is no profile, there's no database. If Vuyani goes to a bank, say in Nigeria, say I go to a bank in Nigeria, I'm looking for my business plan says I'm a 4 tons per hectare producer of cassava. The banker will have to take my presentation as the best they can, because they have no method of validating whether actually I've got a history of producing at 4 tons per hectare or I'm actually a 3 tons per hectare producer of cassava. So they inherently see risk because there is no profile, there's no insight. Secondly, they are not sure if even if I produce at 4 tons per hectare, I'm going to be able to land the product at the price that I projected on the business plan. There's a market risk, market access, the pricing risk inherent there. So a lot of challenges they see from their side. Hence, the lending has not been as great as it should be to support a sector that's so important for the continent. Again, from a smallholder farmer point of view, what we then worked on from a Vodacom perspective, we said, what are the risks that are associated with a smallholder farmer? Trying to look at them from the lender's lenses. So, firstly, it's around the farmer, we call it farmer's family, which is largely about farming in Africa, smallholder farmer tends to be a family business, in fact, led by the breadwinner, whether it's the head of the household, and then you have the challenge of the age of the farmer in the continent. There's not many young people are joining the agri sector. Again, rainfall challenges, natural disasters, but most importantly, lack of skill. I think if you look at on the right of the presentation, I talk about the item number 10, lack of skill of the farmer. We are not sure if Vuyani has the proficiency to produce at the yield that he projects on the business plan. Product prices, will he land the product at the price that he projects? What about input costs, market access, storage? Most of the crops get damaged whilst they are being taken to the market. So there are a number of risks that they see, and we've done the modeling in this regard. If you look at, let's go to risk number 13, the highest risk that banks have said to us is around market risk. We're not sure if this person will be able to produce, to asset market, to sell the product to the market. And then again, the other risk is number 10, lack of skill. We are not sure if he's got the proficiency to produce at the level that if he actually says he can produce that. And then if again you look at number 3, can he really meet the contractual obligations that are associated with lending? So what we then did, we looked at ICT value chain. We said if we apply ICT technology, mobile in particular, we could actually mitigate some of the risk if we stitch together the value chain, linking the big off-takers with smallholder farmer. Then automatically you're starting to lessen, to reduce the risk of market access, because now there is a much more direct relationship between the producer and the buyer. So we've done that modeling, the risk modeling along those lines, and in the next couple of slides, I will be sharing with you what we see the results being. Now, tying together the value chain, the trick is around tying together the value chain, making sure you integrate. There are a number of actors in the agri value chain, as many of you would know. There's input supplier, those are providers of fertilizer. There's government being interested in providing input subsidies, whether it's subsidies for mechanization or subsidies for specific seed for a particular type of crop that they want to support in a particular district or region or province or state in some of the littoral countries in the continent. There is a farmer who's at the center of action. Then again, there's an off-taker, there's some of the agro-processing manufacturers, there's retailers, there's consumers. So that's the value chain. And often this value chain is very fragmented. Governments don't have a system to allocate subsidies because there's no clear database, there's no clear identity of the farmer, and a lot of discretion is being used, and there are lot of leakages in the system. Now, what we have brought to the fore using our own capability, mobile, cloud computing, big data analytics, and the Internet of Things, mobile money in particular in countries where we have got M-Pesa, but also electronic vouchering system in countries where there is no dominant mobile payment system. So we've tied together the value chain. We stitch together. We bring in the big commodity buyer. We register the farmers on the left-hand side as primary producers, and obviously you are able, therefore, to map the two players. So market is secured because there's a very clear market demand from the market in terms of volumes, in terms of the type of product they want, and they also have a visibility of how many farmers are producing this type of commodity and on what conditions are they producing. Also, what we also do to support the improvement in yield, we've developed content that enables the farmers to be educated in terms of soil preparation techniques, treatment of pests. What do you need to apply if you are going to plant, say, for example, potatoes? So what kind of soil preparation approach must we use for a particular soil type, but also what kind of treatment for the plants at stage 1, stage 2 must you apply? So we're bridging the gap between the limited number of extension officers or agri-scientists. We're using data, using mobile to actually reach out to the farmers so that they have access to information that will improve their production yield. Now, in a nutshell, I spoke about tying together the value chain using mobile. Africa's DNA is mobile. The connectivity in Africa is about mobile. So we had to use what is natively in people's hands, what is natively in the farmers' hands. And we are not only talking about smartphones. We also talk about basic feature phones. We use both applications, that is apps, as well as what you call a USSD, so that even if the farmer doesn't have a smartphone, at least can be able to interact with the market, can also be able to interact with the big aggregators. Yes, he may not get all the information that's rich in terms of education when you don't have a smartphone. But from a Vodacom point of view, we continue year on year work with OEMs to push the price of end-level smartphone down so that we can bridge the affordability gap. So with those numbers, massive penetration of mobile in Africa, our approach to help Africa leapfrog the development cycle of agriculture by underpinning it with ICT, we said mobile will be the platform for transformation. Now, these are some of the statistics that you have in terms of mobile and what is being focused in terms of growth. In terms of IoT numbers, 6.6 billion to 27 billion. Smartphone adoption, 160 million, forecasted to go to 540. So clearly, our bet on mobile is the right bet because there are more and more mobile devices in the people's hands in Africa, and we believe that there will be more and more smartphones in people's hands in Africa as the price of smartphone continues to fall. What our principle is about, it's about digitizing the agri-value chain, moving it from paper, and at times where there's very even limited paper, we put it on mobile, and then we are able to trace the farmer activity, what is happening on the farm. It's important that we are able to capture the production cycle or the activities of the farmer so that we can create a track record of proficiency for the farmer in order to attract the financial institutions. What the banks were looking for when we talked to them, they're saying we're looking to understand that the farmer has got access to market. Secondly, we can actually get a signature of the farmer proficiency because the business plan we are to support is premised on the farmer being able to produce at the yield that he projects. So we need to understand, is he really or she able to produce at that level of proficiency? And today, largely, this has been largely of a black box. With our solution, we're opening up the black box to make it much more visible for financial institutions. So at the center of this is farmer registration, know your farmer, making sure that all activities are happening on the same platform so that we can understand and banks can have access to rich data so that they can support their financing decisions. In terms of the platform that we call it a connected farmer, there's a data management side, which talks about farmer registration, farmer profiling, maintenance. So profiling is about the number of seasons that you continue to produce and the kind of yield that you get. That creates a profile where we use analytics, therefore, to support the different type of stakeholders who are interested in terms of the improvement of farming, that is the agri sector in Africa. Two-way communication between the farmer and the big aggregators, that is the commodity buyers, but also enabling government to get insight in terms of what their own financing or support activities. With information around connected farmer, knowing the farmer, you know exactly in which district, how many farmers are producing cocoa, how many are producing cassava, and if government wants to support a particular commodity, they are able to go specifically to a particular district and inject the kind of resources they want, targeted to a specific farmer with no leakages, because all of this is actually delivered through a closed-loop electronic vouchering system, and it's cashless in most instances. So again, there's transaction management in terms of loan as well as a cashless voucher system. So this is a closed-loop system that enables all role players to build trust in their relationship as they seek to improve the delivery of agri output in Africa. So this is one slide. I'm on slide 21 where I talk about e-voucher system. Starts with the farmer registration. So we link them to the agro dealer. Normally the agro dealer is the person who's actually being appointed as a distributor, whether it's fertilizer or some of the inputs. So then we're able to send the message to the farmer that you've got the voucher to go and redeem fertilizer. Then they will go to to that agro dealer or to that distributor and redeem it, and they will only redeem it for the kind of input that it has been issued for. So therefore, we close the loop. Once there's a redemption at the dealer, then funds starts flowing into the dealer's account to say, well, we pay you now because there's proof that Vuyani, who's the farmer, did receive so many bags of fertilizer from you. This is the slide that talks about the electronic voucher management system. It uses both SMS, web-based, USSD, and an app. So we have catered for a range of possibilities because we understand that the mobile penetration, the smartphone penetration in the continent it varies by country, by region, by even county, if you like. So we had to make sure that the basic level of communication is always there, and as you get better devices, improved devices, smartphones, then you improve the kind of experience in terms of interaction between the various role players in agriculture. So in a nutshell, we bring a platform that's horizontal, that is able to register farmers, link them to commodity buyers, enable government to inject input subsidies directed to a particular region, a particular farmer for a specific commodity, but also it gives the financial institutions over a period of time the ability to understand the farmer profile, which will improve the lending decision, and hopefully we can see an increase in the private capital flows or financing decisions by many of the banks into rural agriculture, especially smallholder farming. It's one of the examples of what we have built. I spoke about improving because of the challenges of extension services, challenges related to the ratios between extension officer to number of farmers, agri-researchers. We've worked with partners to build a platform that enables the farmer to have insights in terms of for specific crops, what type of preparation, soil preparation techniques the farmer must follow. But also we also give information about rainfall, and as more and more soil sampling in the continent gets digitized, so then because agriculture has a huge neighborhood effect, we will be able to get the farmers to completely correlate what the soil type is to what the actual preparation techniques that are required. What you have today is that most of soil sampling, soil testing in the continent is largely online, offline, it's not being digitized. And we're talking to various role players in South Africa as a start to digitize this soil testing results so that they are easily available to the farmers, and also using the neighborhood effect in terms of farming practices. So these are some of the screenshots of our soil preparation. It gives the farmer full details. Also, through the same platform, you get access to markets. You also get information about what the prices are of the different commodities in the market. This is example of Cape Town wanting to plant potatoes that I've just clicked. So overall, the architecture in terms of the technical designs, so I had to throw this because we also about technology. So it's a cloud-based managed service. We are not selling technology. We work with the partner, with the different role players, whether it's the big aggregators, whether it's governments, to make sure that we support them in terms of change management. They know the farmer and the linkages. We walk with the journey with them. We don't just give them seats to register farmers and walk away. We are very interested in the impact of our technology, more than just the fact that customers have chosen them. We want to see a result. We get inspired a lot when we see improvement of results as a result of the application of our technology. So I spoke about the risk profile. You'll remember, you may recall earlier on, we had the spider diagram. We did some of the studies here. We felt, our view in our study, the results of that study, if you apply ICT, you could reduce some of the risk by 33%. And we tested some of this with some of the learning institutions. They were quite comfortable with the methodology we have adopted to look at the risk modeling, and they were giving us feedback that with this kind of impact, there's a higher likelihood that lending into smaller farmer would improve. The trick on this is the market, access to markets. If the smaller farmers have a relationship with market off-takers, therefore, you did it a greater part of the project of financing agriculture. Secondly, knowing the proficiency of the of the farmer in terms of the history of their production proficiency, injecting skill and knowledge to support them to produce, to improve yield, is some of the key risk areas that ICT helps to intervene. And obviously, it is not a panacea for everything. Governments must still build what I call economic infrastructure to support agriculture. Storage facilities, warehouses, logistics framework, or infrastructure needs to be there to sustain rural agriculture and smallholder farmer agriculture. So that's the approach, and we work with partners. The economy we're in is the digital economy, it's the sharing economy. ICT enables people to tie together assets that belong to different people and render them into the market as if they were owned by a single entity. And this is what the platform economy is about. So we're able to work with different partners who contribute insights and data to create an asset that is able to transform society. Then it's not about owning the data alone, because if you are exclusive, you create silos of data collection. It's soon not going to be useful. It's when people contribute, whether you are those who are doing soil tests, whether you are doing farmer profiling, coming together, integrating the data so that it can be pulled together into big data analytics and render rich insights to both governments, commodity buyers, financial institutions, and input suppliers. Through that process, we can improve agricultural output for Africa. We can create possibilities for the youthful population that's still growing to have jobs, to get involved in entrepreneurship, and of course, we have the possibility to eradicate poverty in this generation. Without using technology, without underpinning it with ICT and mobile in Africa, we think it's going to be very difficult for Africa to feed itself. Traditional instruments of finance, credit guarantee schemes, and so on, they remain very, very important. However, those alone do not remove the underlying risk. We have to work on the underlying risk so that those instruments can actually give a bigger impact than they can do today. So that's the story of Vodacom. That's what we have done. We've had implementations of this solution. We think that if Africa adopts more of this type of science in agriculture, we should be able to improve the role of the smallholder farmer, their fortunes. We should drive entrepreneurship. But obviously, this is the start. You need to start looking at how then to integrate the other technologies that are in the core of agriculture. So not just the enablement. So Roy, that's the story. That's my thesis. That's what we are doing every day. We kind of like this kind of work.
And what I have to say is that is an exceptional story, and we have a whole host of questions for you, if that's okay. I mean, I would like to just give my own impressions before we start throwing the questions at you. And I guess my first impression is just how much has been done in such a short period of time. When we think about the challenges that face agriculture, globally, but especially in developing countries, everything you talked about, which is obviously small farmers, a lack of good quality extension services due to public resource constraints, the need to link farmers to market to really help them grow their businesses and turn these into, successful enterprises. Everything that you covered is 100% known. We all know that. But what's impressive is that you've taken what, 10 years ago we would have thought was just a telecom service, and you've turned it into an incredible value addition service for all the actors in the value chain. And I guess what's even more impressive is that we're at the early days of this. That even though, when you were talking about that, I could see all these other kind of opportunities that are there. For example, one of the things that struck me, one of the big challenges in all agricultural production is being able to follow traceability, to understand where has a certain commodity come from and where has it ended up. So everywhere being able to go from the supermarket shelf to understand where did that good come from, be it a different part of the world, be it down to the individual farm level. And of course, that's inherently expensive to do. But looking at what you've discussed here, if you're able to link those farmers and those value chain actors and the input suppliers, you have the opportunity to do traceability on a level, and more importantly, at an affordability that's never been done before. And this is where you start to get really excited, because that changes the entire kind of modality of what's available. And of course, taking it back to where the focus of AgriFin is, from my perspective, all I can really get to grips with is trying to understand your opportunities for finance. The fact that farmers historically have very little, financial footprint and very little written records makes it incredibly expensive. And we know this from AgriFin, having worked with 10 banks on 10 individual programs, that it's incredibly difficult to go out to each farmer and build a cash flow, to understand their good agricultural practices, their productivity, their yields, their resilience to bad climatic events or weather events when they occur. However, by turning this into the digital space and linking these guys, you can really see some opportunities to drive down the transaction costs and at the same time, in parallel, increase the lendability of these farmers. So again, I have to say a big thank you before I dive into the questions that we're receiving. A great question that came through, I'm looking at this one now, and it's one that resonated with me, is the question of where was this platform piloted? Is it just in South Africa, which we know is, relatively unique in terms of infrastructure, etc., or has it been tried in other locations in sub-Saharan Africa too? And a follow-up to that is, and what has the impact been? Because obviously this is super exciting, but are we actually getting a kind of understanding from both the enterprise level and the farmer level about the impact that such technology is bringing to farmers, be it in productivity, in higher quality sourcing, in lower side selling, etc.?
Well, no, thanks a lot. Actually, ironically, the platform where we started in East Africa, in Kenya specifically, largely because the structure of agriculture in the rest of the continent is very, very different to that of South Africa. South Africa has about 10% of the big commercial farmers accounting for 90% of food produce, yet the continent is the inverse of that. So where this platform really has had, we felt that there was a good use for it, was around tying a fragmented value chain of agriculture. And when you look at the continent, it's said very, very well that you've got the ratios of smallholder farmer to commercial farmers being very, very different to South Africa. So we implemented in Kenya in different elements of the agriculture sector. So in terms of subsectors, we also worked a lot more. Our implementation came through our working relationship with the big commodity buyers. We provide IT services across the continent. We work with global organizations, and we are very focused in understanding industry drivers. So when we sit with our clients, we understood that some of their challenges around the buying commodities in Africa, and then we started working with some of them. Some of them have had a very big success. They were in the World Economic Forum 2 years ago talking about their ability to buy from commodity farmers, from smaller farmers. So it's working. We implemented in Kenya. We have got cases where we're able to integrate dairies. If you look at a dairy production where a lot of the milk is coming from smaller farmers, people who offer 40 liters a day of milk and others are offering 50, you're able to aggregate that milk through a very structured platform like this so that the farmers can send their milk to the depot. It gets graded, it gets measured, they get paid instantly, but also they get advice to say, improve this particular feed because your milk is low on cream if it was actually meant to be high on cream. So closed loop, well supported, building trust through electronic instant payments. We have implemented this in West Africa, in Kenya today, largely working with the private sector. But where we think the biggest opportunity lies is when you create a common database of smaller farmers across the country. Then you're starting to have rich data that also gives access to both governments as well as banks as well as commodity farmers, and that's the next front. We're working with the African Development Bank on the same principles. So West Africa has been the implementation, and we're coming to South Africa now to start looking at how then do we integrate this technology to the unique farming conditions of South Africa.
Fantastic. That's super interesting and super exciting. And it's also nice to see that a development bank like the African Development Bank are, seeing the opportunities as well in terms of the development opportunities. Another question we've received, and I think this is a fantastic question, is understanding the enabling environment. What positions need to be in place in terms of do we need to have, what are the kind of constraints and challenges? Do we need to have a regulatory environment that's in place? Does there have to be widespread mobile money usage to justify the economics of this? Or can it be, an alternative service for just agronomic data and agronomic data collection? What are the kind of prerequisites to make this work? Because I think a lot of people are probably sitting here listening to this and thinking, could this work in my country? We have data privacy laws, or we have no mobile money or very low mobile money penetration. Or one of the challenges we have is that smartphone penetration is incredibly low, so we'd have to do everything on feature phones, and that could be prohibitively difficult. So it would be interesting to get from your take an idea of what are the kind of key things that need to be in place to make this effective.
Well, then, to be honest with you, in terms of all the other constraints, there's no showstopper. Data privacy laws, so in any practice, you have to have consent of the farmers and so on as part of the bundle. So the laws of privacy, protection of personal information, you have to work with them in any sector, in any country, in any case. The biggest showstopper for a solution like this is in countries where there's low mobile penetration. Where there's low mobile penetration, especially in the farming areas, it makes it difficult to actually get the scale that you want. However, the way we have engineered and architected the solution is such that it works even offline. So as long as the farmer is, because also over and above just poor network footprint, we also understand the challenges in the continent of energy disruption. So the networks are not as resilient as they should be or as they are in other parts of the world. So we have designed the solution such that even offline, whatever the farmer needed to do to upload, to update, the farmer can still interact with the device. So when the network comes back or when the farmer gets into a covered area, it's all the upload. So there is no downtime per se. So that's how we have designed the solution to be fit for purpose to meet the African conditions. But the biggest stumbling block is simple the network. The rest of the conditions are purely more workable. There are no showstoppers.
Fantastic. I mean, that's reassuring to know, because over time I can only imagine that places where currently rural penetration is not perfect are going to see that increasing anyway. So it gives, opportunity there. Another very good question that came in a couple of times were about who owns the data. And I guess the challenge here is, if I'm an enterprise and I'm a large agribusiness firm, and I'm using your service to link to my 10,000 smallholders to give them agronomic advice, calculate their yields, monitor their productivity over time, etc. Do I own that data which sits in your cloud, or do you own it as the telecom firm? And do you have challenges along those lines, and how do you address those?
Well, they are, and I think it's an evolving business model, if you like, if I may put it that way. Today, if a big commodity buyer ask us, and as they have done in the past, ask us to develop the solution, obviously part of it is about farmer registration and so on. We built up that platform, that data. We can't use it as a mobile operator for anything. Only that commodity buyer that has built up the data. There's farmer registration, there are costs associated with that. There's updating the database. There's actually the interaction, there is data. It belongs to them in terms of the agreements they have with the smaller farmer and the big aggregator. So we can't use it. It doesn't belong to us. All we do, we create the platform for interaction. But where we see, and in our discussions with various players, including the African Development Bank and various governments, is that If every commodity buyer in the country creates its own database, we are all suboptimal. And you've got farmers that belong to different databases. The view is to create a common database of farmers in the country, and that farmer gets maintained. So in that case, therefore, what the big issue is the initial investment to set the database up, because then commercial models can be built around access to the database. Those who would not, once the database is there, if Bank A wants to lend, then there would be access charges that are related to that database, all meant simple to actually sustain the database on its own. What we actually work on as our model is purely the facilitation fees to make sure this thing works, but also there are other parties who bring in content. So it's an ecosystem. It's no longer I own it, because the data is as important as it continues to evolve and you enrich it. There are people who are doing soil testing. There are people who are bringing agronomics data. All those people, through the right kind of contractual framework, become party to the evolution of the data. So we're providing the platform, but our view is that as we create national databases, that national database will be asset for the nation, but also it will sustain itself through commercial models so that it doesn't put the burden on government or a single player to sustain it. So it's an evolving commercial business model today, but if commodity buyer A contracts us to do this, we can't use it for any other purpose with their database today. But we think it's going to evolve to a more of a national asset than just siloed databases in the country.
That is a fantastic answer and something that's super interesting to understand. I think it's also, from my perspective, pragmatic, which is this seems to be the early days of this kind of attempt, or to link all the actors using digital channels. And it seems like if you try and make this from day one the only prerequisite to argue over who owns the data, you can never really make that much progress. So yes, you can have one-off relationships with individual firms for individual products, but creating some kind of shared platform where everyone contributes and everyone utilizes does seem to be a sensible way forward, especially as you need to build up that. Otherwise, you end up with that chicken and egg problem. So moving on to a more technical question, bearing in mind how many of the people on the call work in banks and are thinking, how can we utilize your data? How can we use these kind of services to reach people who are currently too difficult to reach, score people who are currently too difficult to score, and service them because currently it's too difficult to do that. So the questions we've received really are about credit scoring in terms of what data do you use? Is it primarily mobile network operator data? Is it mobile money data? Or is it primarily the agronomic data, understanding what people are producing, how they're producing it, how resilient their production is, and what pricing they're getting in terms of being able to create reasonably good cash flows for an individual farmer or individual farmer enterpriser? And I was wondering whether you could talk to us about how the credit score process works, what goes into it, and also, we all know from working in financial services that over time we always refine our credit scores. We learn from experience and we refine and we adapt and we refine and we adapt, and our systems get better and better, and effectively there's a self-learning mechanism. Do you have the same capacity to do that, bearing in mind that as your database grows, you're going to have more people and more samples and more ability to try that kind of technology? Again, I hope those questions make sense.
Yeah, no, it perfectly makes sense. I think our view is quite simple. When we want our initial approach is to make sure that we build a platform or an instrument that will advance agriculture. So it must serve the agri-purpose first. Of course, finance is key part of that value chain. So we are focusing on capturing the farmer profile. So for example, the size of the farm. Over a period of time, we developed the signature, the proficiency, the production proficiency curve of the farmer on specific commodities over a number of seasons, cropping seasons. That begins to evolve and it begins to develop as a signature. And also, obviously, what the farmer produced, what they sold, at what price point, all that information. So effectively, we will be able to get insights about production, what commodity, what did they sell, you will start to be able to construct or to have a validation point on the farmer's performance in terms of its own P&L over a period of time. So that's how we see this thing evolving. But the data that you will get today when we get all the farmers into the portfolio and have produced over a number of seasons, we believe should be good enough to give confidence or to give the lending institution a good insight for decision support. Do we want to add other data of the farmer, what other assets the farmer owns and so on? At this stage, we are not focused on that. We do think, though, once we industrialize the platform, we get it at the national level in different countries, it should be easier to add on. What we're also careful not to put too much load onto this upfront, because the cost of starting up a national database like that can be quite prohibitive and more complex. But once you create a baseline of what is needed today for the farmer for funding, then the farmer will add on. We will add on modules to improve to make the data richer. And I think the credit scoring algorithms will evolve and include many other things as we want to get into granularity of the farmer's profile. So it's possible, but we want to evolve over time. We don't want to front load it with everything. We want just to make it as simple as it can be, but also rich enough for lenders to have insights about the farmer once we've got a number of cycles of production cycles.
That makes perfect sense. I guess a follow-up question would be regarding the kind of individual record of a farmer. I guess what I'm trying to understand here is we all know the banks and lending institutions always have a KYC, know your customer requirement. And so the challenge is, do we currently know whether the identification and verification, ID&V processes for mobile telephone companies are rigorous enough to meet the KYC rules of the banking sector? Or is additional kind of investigative work required? I assume that in some countries where you have a very robust ID system, you overcome some of those problems, especially where the ID is linked to an individual SIM card. But in other countries where maybe individuals have multiple SIM cards and they haven't been verified as they take out those SIM cards, it might be harder. Do you have any kind of insights on that and the kind of challenges and barriers that come through identification and verification and KYC?
Yeah, I think, well, our approach today, remember we're operating the platform in different countries, not only on the countries where we've got its own footprint, that is where Vodacom has mobile network. We actually license the platform even on off-footprint countries because it can work on anybody's network in terms of mobility. Now, the data for farmers, we don't import it from mobile profile. It's zero-based built up in terms of know your farmer. That's why the farmer registration becomes important. We do think, though, that in countries where we have got fully fledged operation or where we've got very strong relationship with MNO, it's possible to take the same record that comes out of the mobile money side and also include it in terms of the profile. But I think those are developments that will happen down the line. I think you will have a Vuyani in the mobile as a mobile customer and a Vuyani as a farmer. At some point, these two sets of records should come together to provide a much more richer profile of Vuyani as a farmer so that the lenders can have a bigger view of how I'm operating on both sides of my interaction with the system. So for now, we're focusing on know your farmer from a zero-based basis, profile them, and then build up the data and insight over a period of time. There will be interaction between the mobile platforms or the mobile usage profiles with the farmer ones in countries where perhaps the platform is hosted by the same mobile operator. I think that will evolve over a period of time.
Fantastic. That is a great level of clarification for me, because I've always wondered how one overcomes those challenges, and it looks like the approach of building up from the ground with each individual farmer is one that actually does kind of give you a very valid picture and helps you to actually understand the individual rather than rely on a telephone number that could be one of many people. I guess another question has come in, which is actually very interesting to me, is that during your presentation, for good reasons, you focused on the partnerships with large agri-trading companies, because obviously there it seems quite reasonable why they would want to invest the time and effort in having that outreach to their individual farmers because of the cost benefits that would imply. The question from the questionnaire is about, does this imply that this primarily works in well-organized value chains? Or have we got any examples of where this is operating in less organized or less integrated value chains, for want of a better word?
Well, at the moment we have used, we wanted to leverage, because it's all about market offtake. Now, you remember you've got a fragmented value chain from an input side. Now, to get to a point of testing the business case and success, we wanted to work with big aggregators initially, so that we are able to understand the points of the levers of success. So we work with the big off-takers on the market side, so that they can underpin the work, our approach to bring in the commodity, the producers on the one side. I'm in one of the provinces now in South Africa, in KZN. I met with a unit for the eTechno municipality that are focusing on the similar type of work, wanting our technology to underpin their strategy. Some part of their thinking is that there is an offtake, there are the big aggregators, whether it's big retailers, but also there is a market for more the general trade, the small retailers that also wants to buy from, even in the townships, they want to buy from a structured aggregation point. So they're thinking about a different kind of distribution. On the one hand, they're also talking about government offtake agreements to fit for prisoners, for police, for hospitals, as part of supporting the smaller farmer on a set-aside basis. Then there's a third wave, which is more the big aggregator. So the solution will work for different type of markets in terms of offtake. The normal small retailer, the big aggregators, the government set aside in terms of government institutions. We are yet to test the smaller retailers in the market. What we have tested is the big aggregators to support them, to support the input providers. Yeah. So we are yet to test it. I will be honest. We think it will work. South Africa may be the first country where we do that level of integration.
Well, we're sadly running out of time, but I think I've got time for one more question, especially as it's my question, and I always like to prioritize myself. This is coming not from a banking perspective, not from an ag finance perspective, but truly from a kind of World Bank donor perspective, which is, what excites me is we have had so many challenges over the years where we've worked on programs all over the world, where the real challenge has been getting advice and information down to the smallholder level, especially because in the last 30 or 40 years, agronomic services and extension services have, become much less kind of comprehensive. What's your vision for the future? If I was to say to you, what do you see for 10 years in the future? Do you see farmers taking photos of crops that are diseased so that they can actually use your databases to find technical solutions to fix them before they make losses? Do you see development actors, when there is a drought, being able to pass money directly to individual farmers who they know are having problems? Do we see a micro-insurance element for this? What's your if you were doing a futurologist type of envisaging, what would you see and what do you think the development impact might be? Just so we can all kind of go away thinking about, maybe rather than focus just on where we are today, what's the bigger picture?
Absolutely, it's spot on. Spot on. Our view in terms of the view of the future is just registering the farmers and capturing their own activities. It's not good enough. We need to actually be able to get them to take the pictures of the crop so that the scientists, the agri-scientists that's at the center can start to see, for example, if it's potatoes, what's the timing of putting early blight or late blight and so on, because they can see visuals of what is happening. That's why the role of pushing the low entry-level smartphone becomes very, very critical. So we have to bridge the gap, the skills gap between the smallholder farmer and what is needed to produce at high yield. So e-extension services using some of the visuals recording some of the video clips, uploading them. We see when you have a well-structured support system, we see that the whole program going to that level. What I actually think that multilateral organizations and global organizations that are in the donor community should be focused on is how do you build scale in target countries in terms of creating these databases so that they can be a resource everyone can leverage, because then we are able to assure social impact, because we are focused a lot on social accounting metrics in the implementations that we do in each country. So the isolated projects, I think, will not yield as great results as working together to underpin African agriculture at scale. So that's the expectation. The insurance part will come in. There's the supporting industries that will come into play as we have a common database that's maintained and everyone works with it, with all the other players. And of course, it's not a view of Vodacom to say we own everything. It's a sharing economy, it's a platform economy. Whoever contributes gets something out of it. What is important is to make Africa's agriculture work, is to make sure that Africa can feed itself.
Thank you so much. Vuyani, that was an outstanding presentation, and the Q&A was phenomenal. We have so many more questions that we haven't had time for, so maybe Tamara, when she comes on, will talk about how we might be able to collate some of those questions and, you know, use the LinkedIn group for AgriFin. But from my perspective, I literally, it's very rare where you sit somewhere and you realize that the world is changing before the better and giving opportunities, especially for the smallest farmers, to access better markets and access better advice and improve their incomes. This really could be a game changer, and looks like it will be a game changer. And I've taken away from this, especially your point around platforms, the idea that you're building a platform that actually facilitates all those value chain actors to all improve their enterprises, including the smallholders. And to me, that's super exciting. You know, technology is no use on its own, but as a facilitator of kind of improving people's lives, this really has so much potential. So thank you so much for making time to speak with us. We really do appreciate it. And I'll hand over to Tamara now to wrap things up. But again, a big appreciation for you. And thank you to all the people who attended the webinar. And thank you for all the fantastic questions. We've collated the ones that haven't been answered, and we'll try and get back. But again, really, really big thank you to Vuyani. Thank you very much.
Thank you very much.
Wow, what a great webinar. Thank you to everyone once again, the participants, and Vuyani. Your information sharing and recommendations and advice has been exceptional. So we very much appreciate that you've taken the time to speak with us today. I wanted to let everyone know that the webinar recording and the materials will be available on the agrifinfacility.org website within 24 hours of this webinar today. We will also send the materials to you directly, so you can either check back to our website or your inbox to get those, and you can review anything you might want to from there. Additionally, we'd like to invite you to join the Agriculture Finance Group on LinkedIn. The link for that can be found in the email that we sent to you, reminding you and inviting you to join this webinar. But again, the name is Agriculture Finance Group on LinkedIn. We'd like to keep the conversation going on that and share resources there as well. And also, if you're interested, we encourage you to become a member of the AgriFin community. Membership includes some excellent benefits, and you'll be the first to hear about all the latest and greatest coming out of AgriFin, including new types of webinars. So thank you again very much. We appreciate that you've been here today, and stay tuned for future updates on coming webinars. Have a great day.
Thank you. Bye-bye.
Thank you, Vuyani.
Bye-bye. Thank you.